Hello, welcome to Smart Investing Market Insights on TFNFinancialNews.com. I'm Krista Das. While the Dow Jones Industrial Average has received a pounding in the last few days, it doesn't mean it's time to take your money out of the market. My next guest says invest in tech now while you still have the chance. Ann Sosnowski is the senior editor of Diligent Investor, and her most recent plays have given her readers a gain of 136% on a credit card technology company, cumulative gains of 172% on a Chinese financial services company, and 90% gains in just 3 months on Comico Corporation. Ann, welcome to the program.
Thanks, Krista.
So, Ann, why are you so excited about tech in this volatile market?
Well, Krista, even though the blue chips don't look so good, tech is where to put your money right now. On Monday, a quick perusal of the market's top industries showed that 4 out of 5 happened to be in the tech industry. Semiconductors were up the most, almost about 2%, with personal computers not too far behind, followed up by multimedia and graphics software and computer-based systems.
Has the hype surrounding the Apple iPhone and the new iPod Touch influenced your decision in any way?
Well, yes. With the recent media frenzy about the Apple iPhone and its newest iPod devices that use similar technology, it's very easy to think that Apple would be the right choice for a buyer on the market. But I do have some other things in mind.
And what would they be?
Well, the simplest, of course, is to invest in the NASDAQ 100. The symbol is QQQQ on the NASDAQ. This is mainly an ETF trading proxy for the overall NASDAQ, and it carries cheaper price calls to capitalize on the increasing demand of tech consumer and industrial products, as well as their components like semiconductors.
How do its fundamentals look?
Well, Krista, it's currently priced at about $48 per share. The quadruple Q, is mirroring the same corrective phase that it underwent back in early 2007. Now, that resulted in a gain of 15% on the quadruple Q index in only 3 months, a 150% gain that could have been netted through buying short-term calls. This time, the technical picture is there once again. A gain from its current price could mean a quadruple Q value of $55.20 at the end of 2007, or $2,942 on the actual NASDAQ, the highest point it has been since the tech boom in the earlier part of the century.
And it sounded like you had more than one play for the tech sector. What are some other safe bets?
Well, Krista, another way to capitalize on a late year-end tech boom is, of course, playing the semiconductor industry. As of the recent tally, chip sales increased 3.2% overall in the month of July. Intel and Advanced Micro Devices, 2 large semiconductor companies, increased their unit shipments by 5%, indicating that the supply glut that affected the industry earlier in the year is actually quickly abating. Now, additionally, NAND flash memory, which is the semiconductor chips that allow mass data storage on products like digital cameras and MP3 players, have increased in price by 8%. Now, the Philadelphia Semiconductor Sector Index, SOX is the ticker, is the best bet if you want to play into the purchases of small handheld devices this Christmas. It consists of such heavyweight semiconductor companies like Intel and AMD, as well as Applied Materials Inc. and SanDisk. Now, the SOX is low priced and sitting on its 200-day moving average these days, a good price at around $500. Of course, you don't want to buy the darn thing. Buy some call options, maybe into February or March, to capitalize on not only sales projections, but solid sales figures as well into Christmas.
Good stuff. Thanks, Ann.
Thank you, Krista.
Well, there you have it. Invest in tech while you still have the chance. If you would like to learn more about Ann's tech plays, visit her website at www.diligentinvestor.net or simply follow the link from TFNFinancialNews.com. That's all for this week. Until next time, here's to great profits from smart investing.